Welcome to Shenkman Education. My name is Marty Shenkman. The topic of this video clip is portability. What is portability? It's a technical tax concept. In the estate tax, if a spouse dies, I'm going to call the husband and wife, not spouse one, spouse two, and I'm going to kill the husband first, let the husband die, just because it's easier to follow a simple sequence. If husband dies and wife survives, husband under current law has approximately a $14 million estate tax exemption. What happens to that? If it's not protected by filing an estate tax return and securing the portability of that exemption, then the surviving spouse, the wife, loses the ability to use that later. Now, for many people, numbers like that just sound in the stratosphere. Why should we bother even thinking about this? Why incur an expense filing a tax return? The answer is we have no idea what the future may hold. The exemption may be $14 million today. It may be made to be a permanent $15 million, and the next administration may change it. It may be down to $1 million. There's no way to know. No one can anticipate what happens to their assets. The surviving spouse may hit a windfall. She may win a lottery. She may inherit money from a relative of hers. For the modest cost of filing a special estate tax return, you can file what's called a portability return. You can lock in and secure that exemption so that if the surviving spouse dies, you have that amount of money. And given the wild swings in what Washington does on tax legislation, why not preserve it so you don't have a problem later? Seems to make a lot of sense. There's a few other aspects to this as well that should be considered. So for example, many people try to just save as much cost as they can, keep things as simple as they can, and if they can handle it without an attorney, do that. It can be a mistake. Here's why. On the death of the husband, any assets the husband owned get a basis step up. So if husband bought stock for $100 and it's worth $10,000 a share, the basis or investment, what you paid for it, for calculating gain and loss, capital gain and loss on sale, is increased to the fair value on death. So you want those records retained. The process of doing the tax return for portability may be sufficient to get you that. So that's another benefit. Heirs fight all the time. If you have an independent accountant or attorney do an estate tax return, the data that's gathered as to what the value of the assets are and what the assets are may be really important to fulfilling the terms of the will of the husband. It may be a way that you can corroborate for everybody's sake and avoid fights later by having the professionals create these returns and the backup for them and documenting everything. So it's not only just about securing an exemption you may or may not need, and it may be a modest cost. That should be done a lot more often than it is. But it's also about getting the data gathered that you need for income tax basis step up, the data you need to make sure the will's carried out, the estate plan is carried out, the revocable trust terms are carried out, and also to corroborate what's going on so the heirs don't have to fight about it. Thank you for joining me, and please keep in mind that all the information on these videos is for educational purposes only. Don't take any legal action without appropriate professional help. Thank you.